Tuesday, February 13th, market analysis, Stan Ehrlich. And we start out with the stock market indexes as usual. Here we go. This is a big break this morning. Those of us who are market watchers know that the CPI came out at 5:30 California time, an hour before the historically regular market session at 6:30 starts. And the E-mini broke down very, very fast. It took it approximately 1 minute, maybe less, for most of the first amount of the crash at 5:30. And about 2 minutes later, a total of 3 minutes, you had the low of the day for a while. Okay. So that's why we have this big daily data, big down day today, currently down 69.75 points on the March futures contract, wiping out at the moment, if it closed, the previous close for 1, 2, 3, 4, 5, 6 previous days. It was overbought yesterday and the day before. I did talk about it being very vulnerable to a beginning of a dip down. I didn't necessarily expect it to be this much this fast, but no surprise considering CPI, Consumer Price Index. And I don't normally mention any kind of fundamental news, but today I knew it was CPI, so I'll mention it. And that's the reason, excuse, whatever, for the market to break down like this. Okay, I think this is the beginning of the correction I've been talking about ever since probably around January 25, 26, maybe a day or two before that, because the market was oversold back in those days, and it did have a break. But it wasn't what I expected. I thought it was going to be back down, and I still do. The support area, or the first one, 48.41. Now, because it got so much more overbought and higher, I'm expecting that level to be challenged, touched, reached soon. Today's Tuesday. I doubt it's going to be this week, but probably next week and maybe early next week. But I also think there's a good chance, an increasingly larger chance, that we could come all the way down to 4,723-ish. I'll be a little more specific, 47.41 or a little under, and then start a longer-term bull move. This is not the end of a bull market. This is just a bit of an unexpected too large number for a fundamental number. And that's what happens. These things happen. Technically, you can see it probably going to start before it does because of my overbought conditions. Any oscillator would probably do the same thing. Stochastics, George Lane's stochastic, yes, it's an oscillator. Wells Wilder's original RSI, which is not what you're looking at. This is my custom version of relative strength index in the subgraph down below. That is definitely customized a lot, variety of things. But anyway, the oscillator helps me decide or predict that we're supposed to have a break. That one did happen a little later than expected. This one, about on time, a couple of days overbought, is pretty normal, and bingo. Now, bouncing around for a day or two would not be uncommon, maybe coming back into the middle of today's range or a little higher, but that has to stop and then go down and make new lows, or simply it's going to start dribbling into new lows right away. Either one's okay with me. Next chart is going to be the spider, and it's going to have the same commentary, except it doesn't trade 23 out of 24 hours a day like the E-mini. It only trades from 6:30 California time to 1 o'clock. Therefore, it opened down, way down, where the E-mini had already gotten down to an hour before the S&P opened, and you have created a huge gap above the market on the spider. Nevertheless, gaps are almost always closed. Today, we obviously closed a gap only from 4 days ago. So that gap, and I said it at the time, gaps are almost always closed, is now closed. All right, what next? That's what you want to know. Well, me too. Anyway, coming down some more, minimum, probably, well, I can't use the word certainty, but highly likely, 491.5. Not much further down, a couple more points and a half. But the real support is down here at 479.5. And that's the beginning of a zone that goes down into 466 for the spider, SPY. So somewhere in the zone in here is where I expect it to get down to and turn around and go back up from that zone. It might stop at the top of the zone. It might stop at the bottom of the zone, but there's always a chance that somewhere in it, it could turn, and I'll see what I can do about picking that point. I'd love to see it get overbought. We're already in a single day down to 50 on the RSI, when yesterday it closed at 77. That's how profound this big move down has been. Next chart. We've got the March. I'd already told you about that and that. Let's go around here to the NASDAQ. I lost my sequence here, so I'll just do it manually. The spider 1 minute shows you the huge gap down on the opening bell and a little rally, minor new highs for the morning, and now sinking again, getting closer to making very probably, in my opinion, new lows again. Next chart. Nah, let's do this manually. Sorry about that, guys. And it should be the DIA. Daily data, same short hours, 7.5, 6:30 to 1 o'clock, 6.5 hours. So opened at its high, dropped almost low and last, and coming into the first little level of support, very minor. Don't have a line drawn there, but my cursor shows me a bunch of highs and lows, and that would be at 380.70. Next support, and the beginning of a range or the zone, 377, give or take a little, half a point or something, down to the blue line, which is really my most optimistic, or I should say slightly bearish downside objective, and that's going to be at about 370.75. Next chart is going to be the Russell 2000 daily data chart, and it gapped down also. And ladies and gentlemen, we actually have left behind what I would refer to as a island top or a pseudo island top, because island tops are typically totally isolated by price level on the left, price action on the left and right. Now on the left here, only a month and a half ago, we were obviously trading at and well above the gap area from yesterday's low to the high of the day before yesterday, and yesterday's low to today's high. So that is a island top, or if you want, a pseudo island top, but it's the way they look, especially if it was sticking out like a sore thumb at the top of a bull market or an island bottom at the bottom of a bear market. They're fairly rare, but they're very bullish or bearish right away. So island top dropping like a rock. We'll see what happens in the next few days. I will not be surprised at all to see this in the next week or two to come down to 189.90 and very possibly 188. The Russell 2000 has been a little bit of a different animal for a long time than the spider, than the QQQ, than the DIA. Next chart is going to be the Qs, and then the NASDAQ futures. I know I'm spending a lot of time on the indexes today, but they're important today in particular. Overbought, gap down, gaps are almost always closed. I'll put a marker on the gap for tomorrow. Looking for a downside swing to at least about, well, let's say 410. There's an old gap to close also way down here on the QQQ, and that's around 408.50. But I'm not ruling out the support level, which is a pretty good one, at 395. NASDAQ futures is going to be extremely similar. Daily data. Uh-oh. I'm going to pass on that. Accidentally, I think I deleted it instead of minimized it. Oh, good. I just minimized by accident. Okay, here we go. So yeah, down to 16,477 is my ultimate downside. But I think there's a very good chance that it's going to show some ability to bounce, but maybe not much or for very long at around 17,165. Now we're going to go to futures. We should see in the interest rate futures, and we sure as heck do, a big down move. Some major comments about that, and I'll skip the other two real quick here. Now, we're already down to the bottom of the support area that I've had sitting here for many months. This is a short-term support level. And like the other indexes, I wouldn't be surprised to see a little bit of a bounce for a day or so, but maybe not. I mean, that's pretty serious stuff we saw this morning so far, and the day is not over. And I apologize for starting this YouTube about 45 minutes late today. I had a lot to discuss with a variety of people. So remember, people, you can reach me at info@ersignals.com, info@ersignals, plural.com. Interest rate futures, bonds, probably going to drop off more in the next week or two, but not too much. And it's going to get oversold. That means it'll turn back up again. And I think it will. How far down? 116.10 or the ballpark thereof, close to 16.15 maybe. And I'll get to the 10-year notes right here. Bearish engulfing, probably going to drop more. 10-year notes 108.27 or a little lower for, I think, the bottom of the break in the next 2 weeks or less. Next, crude. Rocking a hard spot, probably or possibly going to rally up to 80.80. And it might fail a little sooner than that. We're almost overbought. But I don't think this is going to make real strong rally out of this. It might get to the high of the red zone and flip-flop right back down again. Next chart. Oversold conditions, dropping faster, getting down very low on the RSI. 12 is very low. The odds increase the lower you get that the market is about to turn back up. So I would expect natural gas to start to rally any day, maybe before the close. I doubt we're going to get a bullish engulfing green. You got to get above yesterday's high to give one of my signals. Next chart. We have a brand new bearish engulfing on heating oil. Outside down day. Overbought last couple of days in a resistance area. Classic combination. And I'm getting my favorite signal. ER, sell signal. Bearish. Looking for a breakdown probably to about 2.57. Next. Support is so far holding on a big down day on gold. But this is a relatively good support area, maybe even a little bit lower. Maybe I should drop this down to here. That's not necessarily a bad idea. So I'm going to start talking about it still being in support, but there's a support level inside this zone. I just expanded the zone. Oversold, in support, could start a rally anytime, but I think it's going to drop off a little bit more. Now I'm down to 1979 for a downside objective. New chart is silver at some support. It has another support level at 21.2, and I think that could be reached very soon, few days, maybe a week. Next, Platinum, bearish engulfing, but not an official sell signal. Probably also going to get down to support at 843 very soon. Next, high-grade copper, oversold in support, started to bounce yesterday, ran a little rally earlier this morning, and currently low and last a little bit lower. I think it's going to stop dropping and turn back up again and have a little bit more of a rally. Next, soybeans, sideways for now over a week, but the major trend is down. Trend is your friend. Probably going to break into new low ground very, very soon and drop to new lows. Maybe we will, over time, a few weeks maybe, get all the way down to 1092 again. There's going to be some support starting at around, well, we're already there. Yeah, real close. So all I can really say with some degree of confidence, lower. Next, bean oil. Resistance stopped the rally. Minor bullish engulfing at the moment. If that holds up at the close, maybe we'll see another little rally to 48.5. Maybe even a little bit higher. But look, the trend is down long term, intermediate term, and short term. I don't trust rallies. Look for a place to go short. Look for resistance. It already happened 2 days ago. We could see a new low pretty damn quickly. Next, meal. Basically, all the things I've said about grain stand for meal also. 2 days ago, we made a new low for months. We're awfully, awfully close to it now. I think we're going to see new lows for many, many months in a week. And that's going to be new lows since November of 22. Next chart, corn. Well, we've already made new lows since, I don't know, since January of 22. That's 2 full years and a touch. So I can't help it. We're oversold, a little rally first, and then new lows. Wheat. I've been mentioning for a few weeks now that wheat is showing something different, finally, but I'm not sure it's going to work. It has gone sideways for quite a bit. I know it's done this before. Excuse me. But it can't do it forever. So we got 2 choices. Guess what? It's either up or down. It ain't going to be sideways forever. So the trend is down, so you have to favor the downtrend, except we did make a new low back here in November. It was oversold. We haven't even been oversold since November. And the sideways trading range might be building some sort of a bottom. I reserve commentary neutral at the moment. Cattle. Yesterday, we had a bearish engulfing ER sell signal. Today, we have new lows. Working perfectly so far. I like what I see. I've got no problem. The sell signal coming down today just fine. Let me turn off something else here. So, resistance is touched. Bearish engulfing. Dropped. I've got today, the rest of today, and 2 more days to have a rally up to the red dots, which is the ER3 short sale price level. But it looks like I'm going to miss on ER3. But please remember, ER1 is always short whenever you see the red. And we always have a stop starting, but not staying, at the yellow dots. So I'm sure the ER1 trailing buy stop above the market has already started to come down quite a bit. Next, hogs. Rocking a hard spot. The rally in overbought. Got to resistance, stopped it a couple of weeks ago, sliding still into some support. Minimum, I'm looking for 78.20, very possibly 73.20, and maybe even lower than that. Next, OJ. Oh my God. look at what happened and the way that it happened on October 31st. Bearish engulfing red ER sell signal right at the top of the shoulder, first shoulder of a head and shoulder top. The next bar is a modest bar down, not huge, but pretty good. The next bar down was very significant, and it gapped down. Then it hit a support area and oversold and then rallied. What happened just 3 days ago? A bearish engulfing, big one, very much like October 31st. A small, modest barb down the next day, just like back in November. What is this again? October 31st and the beginning of November. Yesterday, a big bar down, just like, honest to God, the 2nd of November so far, and a gap down. These two situations, including today, are so similar to what happened back in October and November. It is ridiculous. So are we going to actually start to rally again like it did back in November 6, 7, 8? I don't know. We're at support. What we're missing is the oversold. I'm thinking it's going to keep on going down. I like the long-term bearish story. Obviously, I like the sell signal, which has worked great again, third time since November. And what can I say? I actually think the market's going to come down. Maybe it'll take a month, maybe 2 weeks, to below 300, and maybe make new lows for many, many months. Next chart, cocoa. I told you to keep your eyes on cocoa, and I meant it. Yesterday was an inside doji, doesn't mean too much, but the level that this market got up to relative to RSI numbers is absolutely rare as a snowball in hell. 96 plus is just unheard of. You don't see that but once every few years or less than that on a daily data chart on my custom RSI. It was almost a guarantee that it would start to fail and start to go down. Now, that was yesterday. Today, we have a little bit of a rally. There's no new high for the trend. I still think it's about to turn down. I'd love to get an outside down day, bearish engulfing, red ER sell signal, and scream bloody murder. The market topped out, but I can't yet. Next, coffee. Resistance stopped the rally so far. Okay. First sign of that happening was yesterday. Today, we're dropping down below yesterday's lows and well back down into the support. I need to close below 181.13 in order to challenge 170. And then we're probably going to drop even a chunk more than that. And when I mean a chunk, I mean probably down to 160. Next, sugar, the sweet, almost making new lows, but probably a new low close for about 3 weeks. We did get one sell signal during, but not the highest high, the topping out process. So I don't have a signal like I would love to have, but didn't get. Sugar hasn't really given me very good signals for quite a long time. I don't know why. Bearish on sugar. Next, cotton the rag, overbought still, new highs for the trend. Again, extremely high RSI levels at a 92.75 a couple of days ago. So I'm looking for this market to top out and drop a lot. Not just down to the support level at 89, but maybe down well into this range between these two support levels. I'm not sure here. 85 is not out of the question, in my opinion. Back to the E-mini. We're still down 7.5 points on the spider. That's a lot, and it could get lower. Looks like it's going to. The E-mini has been making minor new lows or testing lows. And we're looking at the bonds. Sorry. I thought I had the E-mini showing. Well, basically the same thing for E-mini because, interest rates affect it. Thank you for being so patient today. Half an hour show, profitable trading to you. Some brand new stuff today, very significant for the indexes. Until later.